Hello traders, you're welcome to this video. In this video, we are going to be discussing the commodity channel index, the CCI. We're going to be looking at the CCI indicator, and specifically, we are going to be considering the best settings for scalping using the CCI indicator. Okay, so the CCI indicator is a nice indicator, and it can be used effectively for scalping when set up correctly. Okay, so we're going to be looking at a step-by-step guide on how to fine-tune your CCI settings for more accurate and timely entries, right? So we're also going to be looking at just some tips to make good trades, to maximize your gains and minimize your risks, So now we're going to be adding up the indicator to our chart. We're going to start by adding the commodity channel index to our chart. Okay, so for scalping, the best period to use is between 14 to 20. So we're just going to stick with the 14 period, between 14 to 20, depending on how fast you want the CCI to react to price changes. Okay, so the 14 is actually the standard period for the CCI, but it can be too broad for scalping. So, but anyway, the 14 period setting reacts quickly to price changes. So, and as a scalper, you wanna your indicator to be reacting quicker to price changes, so you can be able to catch more moves, right? Because scalpers are looking to catch a lot of good moves in the market. You want to make a lot of trades, and in order to be able to achieve that, you need an indicator that can react quicker to price changes, right? So that's the reason why we're going to be sticking with a 14 period settings. Okay, now if you want a more conservative approach, you can increase the period to 20. That's if you want a more conservative approach, okay, just to smoothen out the indicator. Let's see how the 14 looks like. You can see this is the 14 settings, then the 20 settings is going to smoothen out the indicator a bit, right? You can see. So even though the difference is not exactly very much, but if you want a more conservative approach, you can actually use the 20. Let's look again. You will see the 14. You see the difference, right? You can see the difference. So the 14, from between 14 to 20, is actually a good period, or if you are scalping, right? Now, considering the overbought and oversold levels, we can see that above the plus 100 is overbought, below the minus 100 is oversold. So these are the standard overbought and oversold levels. Okay, when the CCI crosses above the plus 100, the asset is considered overbought, signaling a potential short entry, right? And conversely, when the CCI drops below the minus 100, the asset is oversold, signaling a potential buy entry. Now, if you want an aggressive setup, for scalpers who want quicker signals, adjusting these levels to plus 150 and minus 150 can provide stronger entry and exit points, because this will help you to filter out minor price fluctuations, focusing on stronger trends. So for that reason, we're just going to be changing the levels. We're going to be changing levels to minus 150 and plus 150. Okay, all right, you can see that. So this is going to help you get quicker signals. This is a more aggressive setup compared to the default of 100 and minus 100. Okay, and then it's also good that you confirm your signals with other indicators. While CCI can actually work alone, it can work well alone though. Pairing it with moving averages such as the 50 period EMA, for example. Let's just add on the 50 period EMA. This is just for additional confirmation. So pairing it up with the 50 EMA, for example, for price action patterns, it can improve accuracy. For example, we can see that when we had the CCI give us a sell signal right about here, as the price was toward overbought and the CCI was pointing downwards, we can see that initially the moving averages was giving us a ranging signal. We can see that the price was kind of ranging. So because this is a confirmation indicator, we can decide to just hold on a bit without entering. You can see that eventually the price began to go up. But had it been you had just used only the CCI to enter your trade, perhaps you would have caught some good moves up to this point. It's just that the move did not last for too long before it began to go back up. When you are using the CCI to scalp anyways, you have to make sure that when the price enters the oversold for a sell, make sure you exit your sell, okay? And when for a buy, when the CCI enters you overbought, make sure you exit your buy, because there could be a quick price reversal. And as a scalper, you want to be entering and exiting trades quickly. Okay, so the MA can serve as additional confirmation. We can see now in this situation, after the CCI crossed from the oversold above, we can see that eventually the MA confirmed that signal. But that confirmation happened around here. But that confirmation showed that the buy was now valid. Okay, and you can see that the price is valid all the way up to this point. So using the moving average as additional confirmation indicator is actually a good option, but it's not like compulsory, okay? But you can actually use it for additional confirmation, and you can even use other indicators of your choice, okay? Now, how do you adjust CCI for different market conditions? For example, now in a trending market, in strong trending markets, you can adjust your CCI to be more sensitive. Like you can lower the period, like 10 to 14. You know that we are using the 14 period. So in a trending market, you can decide to lower it to 10. Okay, now let us look for a trending market, but this is for a trending market. It's for a trending market. Okay, don't use the 10 period in a ranging market. Okay, don't use it in a ranging market. So in a trending market, you might want to use 10 so that you can be able to the CCI can react to price when there is a pullback. Okay, so when you have a pullback, for example, you can see that the CCI can give you a signal that you can add to your buy trade, because it's a trending market actually. So when you are already in the buy trade, this is a bullish trend, right? You're already in the buy trade, and then you get a pullback. You can decide to add to your buy trade. The CCI is going to give you the signal. Yeah, as we reduce the period to 10, the CCI is going to react to price changes even faster. Right? So we can see that because the period is now 10, the CCI reacted to the pullback. And if you want to enter another trade in the direction of the trend, you can do that right after you get the CCI confirmation. And even the moving averages give you additional confirmation, because the moving average served as a support level. So we can see that's a confirmation also. Now, in a ranging market, let us look for a ranging market. Let's look for a proper ranging market. Okay, let's see within this period. In a ranging market, you can stick to the 20 period CCI, right? So we're just going to change this back to 20, okay, because this is a ranging market, right? So in a ranging market, you can see that when the price enters the oversold, yeah, you can consider buying, and when it enters the overbought, you can consider exiting your buy and entering a sell. And then when it enters the oversold again, you can consider exiting your sell and entering a buy, and just keep on going like that until the market begins to go in a specific direction. And when you are entering these trades, make sure you set a tight stop loss, okay? Tight stop loss, because the breakout could happen anytime. So you want to set tight stop losses when using these settings, right? Okay, now some tips for maximizing your profits and minimizing your risk is try to combine the signals you get from the CCI with price action, okay? Try and use support and resistance levels. Support and resistance levels, very important. Use trend lines, they're very important, because this can help you to, get additional confirmation, get an idea of what the market is doing, where price is going, and all of that. So using that additionally with the CCI signals is going to help you to get even more precise entry and exit, okay? And then try to avoid over trading. Only take trades where the CCI aligns with strong price action or trend confirmation. Avoid entering trades solely based on CCI crossing levels, because no indicator is foolproof, okay? So try as much as possible to get confirmations and try to avoid over trading, okay? Now for risk management, use stop losses wisely. While CCI can provide great entry points, always have a stop loss placed just beyond the recent high or low, like a recent high for a sell, a recent low for a buy, okay, to protect yourself from sudden price reversal. It's very, very important. And try to avoid choppy markets, because the CCI can give many false signals in highly volatile or choppy markets, you see. So you try as much as possible to trade when the market is more favorable. So yeah, if you have a normal ranging market, yeah, you can actually use the CCI indicator in a ranging market. We already discussed the settings. You can use the period 20 for a ranging market. For a trending market, you can use the period 10, okay? For a strongly trending market, okay? On a normal basis, you can just use the period 14, All right. So now these fine-tuned CCI settings and tips will help you to enhance your scalping performance while keeping risks in check. So I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more videos on trading. Cheers and happy trading.